Hey everyone, what's up? This is Mozart speaking. The correction is still ongoing. Basically, not much has changed since yesterday. The price has dropped a bit since yesterday's review. Another 3%. It dropped at its peak. Right now, we're sitting right at the liquidity level. Two levels, the main liquidity points in this sideways movement. By the way, this is what I'm looking at, the 4-hour chart. I posted both of these levels in the Telegram channel on January, also yesterday. So that's the second level, $93,000 to $94,000. It's not as traded and not as liquid as the upper level that we lost, $97,000 to $98,000, but also not weak. That is, judging by the density, something closer to the region of 250 to 300,000 bitcoins was traded there, and the upper level is already approaching 400 to 500,000 bitcoins. So what's the situation here? I'll just say right off the bat, I don't like this, and there are some external narratives that I don't like either. This is not the best video that you would like to hear from me, but I have to say this, and I'll point out that it relates more to the short term, what might happen in the next few days, not months. So if you're only trading for the medium term, this doesn't really affect you at all. Basically, you only have monthly trades planned for a month ahead. This forecast won't have an impact. So the first point, this is the amount of volume transferred from short-term holders to losses on the exchange. Right now, I'm looking at it on a daily basis, but averaging how much was transferred per hour over the day. So right now, during this entire decline, they were transferring about 1,200 on average per hour. At the peak, that's 1,250 bitcoins. This corresponds to the overall failures and local dips. After Trump's victory, the print corresponds. But this indicator is pretty sticky. P usually likes to reverse markets through convergence, meaning when things come together, not always, but more often than not. You can call it bullish divergence, whatever you want, it doesn't make a difference. So, for example, we're drawing a bottom. It was recently, and here we're just slightly updating it. Given that, the indicator is also showing a new peak below the previous one. Here, we have the first peak. After a correction, the price rises again, indicating an upward trend, but now we see a downward pattern. Similar to late October and early November, we formed a peak, then a bottom, updated it, and the next peak was lower. Then we surged. Or like what happened at the end of October and the beginning of November, where we drew a peak. Then a bottom, updated the bottom, and the next peak was below the previous one. And then boom, we shot up. So the selling pressure is coming to an end. The lower the next peak with a lower price decline, the less selling pressure there is on the price. That is, sellers dry up, buyers enter the game, the price reverses. Right now, we're only seeing the first peak, and that makes me a bit uneasy. Most likely, it's looking like some kind of bounce, heading somewhere. I totally think we might even test it back, this range. The area around $97,000 to $98,000. That's where we took off from. But we need to draw the second peak. For now, the chances are opening up. The second peak that will cover the first one. This drop is heading somewhere around 90 to 91, and maybe even up to here, to the marks of $88,000 to $87,000. Unfortunately, every day there are more and more as we stay in the current range. I'll explain further. That's the first point. The second point, the loss, is the total supply loss by short-term holders of all the coins. And just to remind you, short-term holders are all the people who hold their bitcoins for up to 155 days. It's currently at 50%. 50% is usually a critical point everywhere. In any bull markets, when it comes to a further drop, if this level isn't held. And in bear markets, it's the opposite from top to bottom. From the perspective of further growth, if the bears can't hold this level 50%. So we recently dropped to a loss of 57%, and now we're almost back to that point. For example, January corrections, peak corrections of 2024. We tested this line once, after which we went higher. Now we're approaching it for the third time. It's already the third time, and that's quite a lot. So if we don't hold this line, there was even an attempt to hold it after the Iranian attack. There was an attempt, but they couldn't do it. They couldn't hold it, and we went further down. If we don't hold it now, that's going to be a bad signal for a return. Somewhere around the levels to close the gaps at $87,000 to $88,000, somewhere over there. The same thing works and has worked in previous cycles. Basically, well, in the 2021 cycle, we hardly ever came close to that level at all. The 50% loss was only right here. But that wasn't a bull market yet. That was a consolidation period. It was September-October 2020, so it was also fall. Next. One correction was roughly in this zone during the drop. By the way, right now the Ether looks very similar to this structure in September-October 2021, after which we moved higher. The same goes for 2017. Here we broke through deeper, but we usually only break this line once because the volatility was higher here. There were three main corrections during the 2016 to 2017 cycle. And after that, we really broke through here. We've turned into a bear market, so right now there are some edges, which is why the indicator can't go much higher anymore, because that's when the next moments start to form. What are the next moments? Well, here's the chart that I often show you. This is the average purchase price for new Bitcoin holders who bought their coins within the range of 1 week to 1 month ago. So right now, their average entry point is about $98,000. So that's roughly the maximum level of consolidation. We tried to break out on January 6th. It was a good attempt, but the environment, with these jolts, with the sharply increased risks, with the new surge in inflation, all of this fell back, down. Unfortunately, we couldn't hold the price down, although the chance was good. Once again, we fell down, and the longer we stay down here, the more stress these buyers are feeling. They bought a lot over the last month and are starting to sell off. What you can basically see from these indicators is how actively they're starting to shift. That's additional pressure on the market. The first line doesn't hold the line in the upper cohort. Then the support of the next cohort comes into play. And this is already from 1 to 3 months. So more emotionally stable people who improve their buying strategy can hold onto their Bitcoins longer. So right now, this line is around the mark of about $89,800 to $90,000. Roughly speaking, if we don't shoot up right now, at least to 97 or 98, we're going to head towards that line. Let's go ahead and test that at least $90,000. This probability has now increased compared to just a couple of days ago, before the JOLTS report. Right now, it's significantly higher. For example, January 2024. I'm going to remove everything that's older than 1 month for now. We tested that line just once. We tested it with just one touch. After that, the market turned around, although we were still quite far from ADA back then. Right now, we're already at ADA, and there's just a small distance left to that line. The same goes for the 2021 cycle, and it was really strong during that cycle. There wasn't a single touch here, just right here before the Chinese ban. The same thing happened in September-October, fall of 2020, and during the bull run of 2016 to 2017. We touched that line literally twice. 1, 2, that's it. Out of the 3 main corrections, or even 4, we only touched it twice. Now we're approaching it again. This is already a line, you could say. There's support indicating a bearish market. So if we drop below that, we could see that again as in 2021. But we haven't reached there yet. So if we drop below that, we could repeat that scenario. That's what happened in 2021, unfortunately. But for now, we haven't even reached that point yet. There's no need to panic just yet. For now, we're struggling with the line from the 1-month holders. Although they are definitely selling off, it's obvious. Next. The net loss in our system at the moment exceeded. I'm also averaging it out over 3 hours on the hourly chart. On average, they were selling a loss of $52 million per hour. Then right here, by the way, we have a little convergence. A little convergence. A new low, but the loss is already smaller. So the selling pressure locally, right within the span of an hour, is coming to an end. This is actually hinting that we might see a bounce at least at this level. $96,000 to $98,000 over there. And basically, these losses are pretty small. They should be within the bounds of a bull market. That is, they happen, but they don't pass some boundaries. So they're there, they're there. But they don't cross serious boundaries. Because right here, it's already a bit of a gray area. Doesn't smell like a bull market here. If we drop significantly lower right now. Next is the cost basis bands. So here I'm taking the average purchase price. So from this indicator, but not by individual categories. There's 1 month, 1 week, or 1 month, 3 months, or 3 months, 6 months. I'm taking all the short-termers. This is basically from 1 hour to 6 months. So up to 155 days. And their average purchase price is currently about the same as the average purchase price for the 1 to 3 month cohort. A little lower. If those are $90,000, then these are $88,000. In 2024, we almost touched it, then rose. Once below, it risks sideways movement like last summer. Once we cross and stay below it, especially like here, it threatens to turn into prolonged sideways movement, just like last summer and fall. We might touch and bounce back, but that's the worst case scenario. Again, just like we had last summer and all fall. I apologize last year as soon as we cross and stay below. So we might touch it and bounce back, but that's really the worst case scenario. If we drop lower, that's it. There will be pressure from above from the entire cohort of short-term holders. Which, by the way, if we look now, the volume H-band is already below. 40% of all holders of active exchange offerings of Bitcoin. They will put a lot of pressure on the market, trying to at least break even. So we can't drop lower for a bull market. In the bull market of 2021, that scenario was completely ruled out. There was an extremely strong bullish candle. I mean the annual candle. Annual, 2021. Just last fall, we were hanging around. The average buying line for short-term holders. Well, and in the cycle of 2017, yeah, we broke through it too, like twice, and it wasn't even over days. We probably broke through on the hourly chart because we shot up. From there. Back then, volatility was different. Less money in the market allowed for more movement. Bitcoin corrections of 30 to 40% were normal. Now, a 20% drop is disastrous. Anything over 15% is too much. We've dropped 10% since the JOLT report was released. That's already a lot. For some local correction, this is about blockchain. Here I shared some of my warnings. Overall, we've reached a critical level for the shortest-term holders. If we can't hold this level, we're going to drop lower to the next level, which is also there. It's in the range, but considering all the spikes, all the noise that could happen, and the liquidations, it's roughly in the range of $86,000 to $89,000. Somewhere over there. We're going to head towards it and start trying to bounce off of it. So it's important to understand this. And all these indicators that I'm showing are also on the edge. They're holding for now, but these are the last levels that are keeping the price up. Here, we need to make some kind of decision. For buyers, if we want to see a continued bullish market like this, we need to get out. We either need to get out at the current prices or drop down to 87 and shoot out of there really quickly. Really fast. It's going to come down to the hours now. It's the same on the chart. Here's the 4-hour chart. What I don't like here, but that was a good attempt. Right here to get out, and the candle was strong, like really strong, a good candle. There was an attempt, but they couldn't do it. Everyone got absorbed by the Joneses and traded around that 200 moving average. Traded, it was fine. And then they broke out, as is standard in most bull markets, but they couldn't hold out and went through again. Moreover, it is much lower than 200 moving. That is, I don't like this. Again, from experience, from statistics, I can say that more often than not. Such structures work out, that is somehow either like this, or they work out environments like this, then like this, and then like this. This is what happens more often. That is, this one, it's cut. Well, it's so unpleasant for the trading 200 moving to go beyond it on volume and return on an even larger volume. Well, it's a problem, to be honest. I'm not saying we're definitely going to hit 88, but the likelihood of that happening, I'll say it again, is higher now than it was back on January 6th before the Joneses publication. You can close everything and just wait for the price to get there. But the likelihood of that happening, I'll say it again, is higher now than it was back on January 6th before the Joneses publication and above. Well, really significantly above. Well, maybe about a 50 to 55% chance of at least hitting $90,000. So considering the current picture, plus the daily chart, again, we've dropped below that 50-day moving average. Continuing with this sideways movement. Not so good, I don't really like it. So the likelihood of revisiting those initial lows is really high right now. With a spike somewhere around here, there's a high chance of a revisit. Just a heads up. Could be like that. Don't be alarmed if that happens, especially if you have medium-term positions. If there isn't a proper bounce from here, then it's almost guaranteed to come from this point. Almost guaranteed from this zone. That's about our charts. So that's the thing. Yeah, definitely a long position. That's a bit concerning. And we couldn't test it. S3 was normal last month. At least once it gets tested on the bull. Here with 3, it is somewhere in the region of 88. Now, before and after Trump's threats, there is a high probability of watering. I can't do anything about the schedule, but for now it looks like I might go there. Keep in mind everything, and all the current trades, ideas, entry-exit points, and adjustments. I share everything in the Telegram channel, so regarding Ethereum, there was a decent trade. We made a good profit before the drop. And I'm waiting to average down. There will be new trades. The link is in the description below this video. I don't share these trades on YouTube. Oh, that's all I wanted to say. I wish us all good luck. This was Mozart signing off. Have a great day, everyone, and goodbye.